Dipak Gupta, Joint Managing Director of Kotak Bank, joins us with a take on what is the way forward for the Indian banking sector. Dipak, good morning and thank you for joining us. Dipak, we have seen WPI inflation numbers go up to 7% again. While the CPI remains close to double digit, is this a sign of concern, and do you see further rate hike coming from Reserve Bank of India?
I think there is a distinct possibility of that, really, yeah. And at this stage, the inflation numbers are really not looking good. And if you look at a base impact point of view, I think we should really expect slight deterioration going forward, at least for the next 1 quarter. So there is a reasonable expectation that there will be rate hikes, really. I mean, from a logical point of view, that is how it should be. There may be other factors because of which they may not really do that, really.
Dipak, what is your sense on the evolving growth dynamic then? Because we're hearing policymakers talk of green shoots here, but are you seeing any real signs of growth in the ground?
Well, not really. You know, the green shoots probably are still early stages of green. You know, we've seen some maybe pick up on the working capital side, but when you look at really non-consumption related, capex related, you know, core sector related, absolutely no movement. And this doesn't seem to be anything really on the horizon, you know, that you would expect something to happen in the next 3 months or 6 months, yeah. Not even probably on the drawing board at this stage, really.
So in your point of view, which is the biggest issue plaguing the entire banking sector right now? Is it the high policy rate, falling asset quality, or generally lack of good projects to lend to?
I think it's a combination at this stage, yeah. And it's not just one issue affecting universally everyone, yeah. Part of the problem undoubtedly is asset quality, yeah, but that probably impacts one set of banks. And I think the asset quality problem probably is heightened at maybe the mid-market end, yeah, the mid-market corporate end. So banks which are probably over-focused or have lent extensively into that segment will face that problem, really. And, you know, even on the stressed asset side, really, I think the problem has been there for the last 6 to 12 months. What you're seeing now really is manifestation of the accounting of that problem. So it's not that it's a problem which was just created, you know, a month back or 3 months back. It's always been there for, you know, 6 months to 12 months. Yeah, you're just seeing now the accounting impact of that. So that's one set of problems. I think the other set of problems, and that is the more worrying problem, is overall growth itself. Yeah, all of us have been, you know, last 3 years, 5 years used to 25% and 30% growth. And I think it takes time to understand and realize that it's not the same. Yeah, growth rates are really looking at more in the 10 to 15% range at this point of time. So how do you sort of reconcile yourself to this lower growth number? And that's probably worrying another set of bankers at this stage, really. So I guess it's both problems. It's not just one isolated issue.
So in terms of Kotak Mahindra Bank, what is the credit growth for this fiscal looking like? Which sectors will drive growth for you? And is it going to be over 15%?
Well, yes and no. You know, we've said that we expect our growth to be around the 15% range. Now, whether it will be 15 plus or 15 minus actually depends on how we see the various sub-segments really move. For example, if you exclude really, let's say, commercial vehicles and construction equipment finance, where we've sort of gone slow, actually gone negative, yeah, the growth rates have been 15% plus. If you just look at the consumer piece, the growth rates have been close to about 24, 25 odd percent, really. But when you put everything together, then the growth rate doesn't look really that great at this point of time. But, you know, each of these segments over the next 3 to 6 months will grow differentially. Some segments will, you know, move back to relatively better growth rates, and some segments will probably remain at their high growth rates. But I'd put a number around this 15% range going forward, really.
Dipak, having said that, there seems to be a general aversion among bankers to lend to large corporates at this point in time. Are you also following a similar strategy at Kotak Mahindra Bank, where you are choosy and extremely careful when it comes to lending fresh?
I don't think the problem is really large corporates as a broad definition. Yeah, I'd like to probably disaggregate large corporates into, the traditional large business houses and maybe the mid-market corporates, which probably have become large in the last 3 to 5 years. Yeah, the problem at this stage really is much more in the mid-market end really than the large corporates. So the large corporate lending continues, and I think it's doing pretty well. But mid-market is undoubtedly a problem, really.
Are you looking at raising capital from the markets anytime this year? What are your capital needs?
No. We have tier 1, which is probably the highest in the banking industry, so there is really no requirement for fresh capital at this stage, really.
So, given that you have been holding on to your capital adequacy that is much higher than the regulatory requirement as well as the industry average, most of us believe that you are scouting for some inorganic growth. Are you close to something?
No, that's always been an option which we've been exploring, and it's not something which is new, really. Yeah, we've been doing it for the last 3 to 5 years, really. There is nothing which is, worthwhile at this stage or something in the offing, really. But that's an option which is always available. But the fact that we are holding a higher capital is not necessarily related to that. Yeah, I don't think there is reasonable use of that capital in the immediate near future. That's the problem, really. But once growth rate picks up, and all of us really are hoping that growth rates will pick up sooner than later, all of that capital will eventually get used up.
And what about your fundraising plans? Will you be looking at any overseas fundraising, and have you taken advantage of the FCNR swap window?
Yeah, we made use of that, and it is reasonably beneficial. But the biggest challenge, actually, if you ask me frankly, is how do you deploy that money? Yeah, because, to get maybe 3-year sort of reasonably fixed return lending becomes a challenge in this market where growth itself is a challenge, really. Yeah.
So what is the outlook on NIMs going forward? Are you facing any pressure in maintaining margins at these levels?
I think margins is less of a worry. As we discussed earlier, the problem is more A, on the asset quality side, B, and this is industry in general, really. So asset quality side, and number 2 problem I'd say really is growth related. Margin still is a relatively smaller problem at this point in time, really.
And what is the level of margins that one can expect?
See, in our case, NIMs have been in the 4.5% range. So I think we should be around that range, really. It shouldn't be too much of a problem there.
Comments coming from the finance minister, and they're pertaining to the rupee now, and the finance minister seems to be alluding that the rupee is stable now. Rupee volatility has now died down substantially, and now rupee seems to be reaching that fair value range. So maybe this is some kind of an indication for RBI to take MSF rates down further, because large part of the price action in the MSF market was a function of rupee volatility. But banks are they haven't recovered. So for a trader, the trend for banks clearly is down. Nifty is trading above 6,050, but the bias is on the downside. And Nifty futures now, so the premium, which was at about 30 points about 2 days ago, has just evaporated to only 15 points. Dipak, Reserve Bank of India is likely to issue new bank licenses by early next year and given a preference to those with specialized banking models. What is your sense on the plan to issue differential license rather than a present universal banking model?
No, so new specialized banks are good, because there are undoubtedly segments of the marketplace which become very difficult for a universal type of a bank to concentrate and focus on or service appropriately. So specialized banks focused on specific sectors is obviously a good idea, really. So that should be pretty welcome, really.